Good morning. It's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of January 11th, 2021. Happy 2021. I hope all of you had a wonderful holiday season. Okay, so what's happening in the market? Last week, wow, so much volatility and drama. There was a huge sell-off in the bond market, and mortgage rates went up. Every single day they ticked up and ended the week much higher than they started. At the end of the day, it's all about being certain, about knowing what to expect moving forward. And what I mean is that we really officially know who the president's going to be and which political system is going to be driving our economy for the next four years. We know who will be driving the bus in the Federal Reserve and the Treasury. And so why is this important? Well, we all know that mortgage rates are determined by the trading of mortgage-backed securities in the bond market. And when the bond market has a sell-off, when money shifts from that bond market to the stock market, mortgage rates go up. And that's what happened last week. Mortgage bond traders look long-term. They want to have confidence and certainty. They don't take a lot of risk. And they want to know what decisions are going to be made and who's going to be making those decisions so they know how to invest long-term more conservative. Now we know that. And so they're going to start investing that money. And now they have that certainty about moving forward. So how is this affecting us moving forward? And really, what are we looking at this week? We're looking at three things: the Federal Reserve this week, economic news, and the stimulus. So the Federal Reserve, they're going to have their first FOMC meeting of the year in a few weeks. And so a lot of Fed officials are going to be speaking, giving some insight about what they think 2021 is going to look like, what their decisions are going to be moving forward. Right now, the Federal Reserve has been pumping billions of dollars into mortgage-backed securities to artificially keep mortgage rates low. If we didn't have COVID-19, we'd see rates probably in the 4.5% range for a 30-year fixed mortgage. The Fed's not going to continue to do this forever. Eventually, they're going to taper and start buying fewer of these mortgage-backed securities. So when are they going to do that? That's a really big question. Many think that the Federal Reserve will continue to buy mortgage-backed securities into the first, second, and the third quarter, maybe starting that taper in the fourth. So we're going to be watching some of those reports and news and see what we can expect, maybe get an insight what they're going to report before their meeting. The second thing is economic news. Quiet day today, a big week of economic news coming out and reports. Not a lot of stuff that we expect to drive the market. Maybe one thing, and that's on Wednesday, the CPI, the Consumer Price Index, which gives us a glimpse into inflation. Now, if we have higher inflation, meaning it costs more to buy a loaf of bread and a gallon of milk, inflation is bad for mortgage rates. Mortgage rates will go up. And if manufacturers can't make stuff fast enough to keep up with demand because maybe the workforce isn't available, then we can see some inflationary pressure. And that's something we've been talking about for the past few months. The third thing is stimulus. So obviously we've had a stimulus package that was passed at the end of last year. This is probably the biggest thing that has the potential to move mortgage rates this week. If the Senate and the House agreed to more stimulus, they tried to do it last week, it didn't happen. But if they agree to some type of a package this week, mortgage rates will have another sell-off. The bonds will have another sell-off. We could expect rates to go up. We just don't know if they're going to come to some kind of agreement this week. They may kick the can down the road for a few more weeks. So what do we expect this week? A volatile week. We're not going to float starting out. We're going to lock in, just not expecting or not wanting to play the market this week. So if you or your clients need some insight about mortgage rates, go ahead and give me a call. All my information is down below. If you know someone that could benefit from this update, please forward it to them. And if you have any comments on today's analysis, please share. Thank you. Have a productive week, and we'll talk to you next week.